Hello, and welcome to Healthcare Matters, where the medical and legal communities come together to discuss healthcare matters. I'm your host, Mike Matray, and today's guest is Troy Bundy. Mr. Bundy is a hiring partner at Hart Wagner in Portland, Oregon, where he has been defending healthcare professionals since he joined the firm in 1996. Welcome to the show, Troy.
Thanks, good to be here.
In your professional experience, do higher limits on a physician's medical malpractice insurance increase the dollar value of settlements in cases of an indefensible claim? In other words, can a physician or entity be overinsured? And conversely, can a case be made that the lower the limit, the lower the risk exposure?
Yeah, I've dealt with that issue recently, and I understand the thought process of wanting to potentially lower exposure by lowering limits. But I don't agree with it. I think it's a dangerous practice, to be honest with you. And you better make sure that there is no ability to pierce the veil and go after personal assets, because in some instances you may have a situation where you only carry, for instance, $1 million in coverage, but yet you're dealing with high-risk patients. And you don't want to get that extra umbrella, or you don't want to go to a 3-5 policy or something like that. I don't think it has any impact, to be honest with you, whether or not you have less limits available to a plaintiff's attorney. In some instances, and this is one of the points that I discussed with some of my clients, you may have a defensible case, but the exposure is high and well above limits, so there's more of a likelihood that you would settle a defensible case because of the excess exposure issue, which then can result in additional premiums having been paid because you've been settling cases. So I do think, to a certain degree, the nature of the practice is important to consider. If you're running an OB clinic, if you are taking care of high-risk pregnancies, versus a standalone primary care clinic, there may be something to it, but there's no universal answer. And I liken it to you can ride your motorcycle without a helmet, but if you get in a wreck, you might want to have the helmet on. And quite frankly, I haven't seen any evidence to suggest that because there are lower limits, you're less likely to be sued, or you're less likely to get out of a lawsuit. Quite to the contrary, if you have lower limits, it's just like anything else. If you have a high dollar value case, and the risk, and when we evaluate a lawsuit, we're always asked about defensibility. It's never about, well, what about the fact that there are very little limits? When there are very little limits, it raises a number of issues. And let's talk about, for instance, the clinic that decides to carry a $1 million limit policy, but yet routinely sees lawsuits that are brought against it far in excess of $1 million. The assets of the clinic are still at risk. Just because you only have $1 million in coverage, that doesn't mean that the clinic is safe and it only has $1 million worth of exposure. The assets of the clinic can be leaned against. The assets of the clinic can be collected, and the clinic can be closed as a result of a loss because you were underinsured, or any number of things. But the fact is, if you have a corporate structure, a clinic that you're trying to protect, you want to make sure it's adequately protected, and carrying limits that aren't enough or that are very low to dissuade lawyers from suing you is not going to work. There's always a lawyer out there who is willing to sue and collect money. So my advice is always to make sure you have plenty of insurance. And in the event that we have a catastrophic loss or a big problem with a lawsuit that necessitates a big payout, we'll have that money available. Because the fact is, most lawsuits, if you have a $1 million with a $3 million umbrella, or a $3 million with a $5 million umbrella, or whatever the case may be, if you have enough adequate coverage, then we will be able to either defend the case 100% to its conclusion if it's a defensible case, or we'll be able to negotiate a settlement well within the policy limits so that you can keep your corporation and keep your clinic active. But leaving yourself out to dry in hopes that, they won't chase after me because I don't have a lot of insurance, it's not a well thought out, in my view, business plan.
Well, Troy, I'd like to thank you for coming on Healthcare Matters today. It was wonderful to have you as a guest, and I hope you'll come on again soon.
Thanks.
One of the hottest trends employed by the plaintiffs' bar in medical liability lawsuits recently has been the reptilian theory. Can you explain the concept of the reptilian theory, how it influences juries, and how the defense counsel can diffuse this strategy?